Welcome to the Source of Commercial Real Estate, where we discuss all things non-residential commercial real estate. I am your host, Jonathan Hayek, and today I'm talking with Mat Sorensen. Mat is the best-selling author of the Self Directed IRA Handbook with over 40,000 copies sold. It is the go-to book for investors and professionals in the self-directed IRA industry. As CEO of Directed IRA, Mat led the company to $1 billion in assets under administration in 3 years. His knowledge as an attorney is sought after for real estate, private funds, notes, rules, and regulations. Mat is also a VIP contributor to Entrepreneur and has been cited, referenced, or quoted by the Wall Street Journal, Forbes, and The Guardian on self-directed topics. Mat is a senior partner at KKOS Lawyers and attempts to maintain his youth by skiing and racing road and mountain bikes. Mat, first question, most important thing, where is your preferred ski destination?
Ooh, preferred ski destination. Man, I would say Park City. And I put Snowbird second. I'm a Utah boy. I grew up in Utah. I worked at Snowbird while I was in high school, actually. But Park City is it's kind of more my family resort to go with the family, with my wife. So
yeah, both great destinations. Love them. I'm partial to Steamboat Springs, Colorado. Are you a downhill guy, or do you do any alpine or backcountry? Or
I used to go in the backcountry back in the day when I didn't have kids, and and I had more time on my hands. But now I need a lift to take me up and down. So, but no, and I don't ski as much as I should. I maybe get 5 days in a year, but love it, and I just love being outdoors in general. So.
Great. Well, I am really looking forward to this conversation today. This is a really important topic that we're going to talk about, investing with a self-directed IRA, and I think I've got myself an expert here. So really looking forward to this. Mat, why don't we start out with you telling us about your background, how you got started in real estate, and what your work looks like today?
Yeah. So, man, I'm an attorney. I've been an attorney since 2004. It seems so weird. It's been a long time, actually, coming up on 20 years. But I actually spend most of my time as CEO of Directed IRA. We have 12,000 plus accounts, 1.3 billion in assets now, growing quickly. And our typical customer comes to us because they want to buy real estate with an IRA, whether they're investing in a rental, in a duplex, they're investing in a fund that's buying a bigger commercial piece of real estate. They're doing a private money loan to someone else, or a private note fund for someone else buying real estate. So that's what I'm doing day to day, running that business, have 100 plus employees between my companies. But I'm also a real estate investor too. I bought my first property when I was 18, actually. And it was a rental, which I later sold. I've owned multiple single family rentals and commercial properties, and still do. I actually own real estate in my retirement account and done private money lending myself. So what I talk about is what I actually do too. Like I do this myself with my own retirement account. So, but that's a little about me. I love real estate. I had more success in real estate myself in my retirement account and my investments than anything else. And so we like to spread the message that, hey, your retirement account, which there's $35 trillion in retirement accounts. There's no more money anywhere than U.S. retirement accounts. So we want people to know that $35 trillion can be invested into real estate. Most people don't even know that. So I want to connect those two really powerful topics, real estate and the $35 trillion in retirement accounts.
Really powerful message for investors trying to raise money, and also investors with a ton of money sitting in an IRA. Looking at the stock market right now, that is kind of flat, and some people are projecting it's going to be flat for a while. And so let's get into this. Let's start 30,000 foot view. Yeah. What is a self-directed IRA?
So in simple, it's an IRA that can invest in any asset allowed by law. So when retirement accounts first came out, IRAs, you could always buy real estate. A lot of people come to you like, Mat, IRAs can buy real estate. When did the rules change? they've never changed. What's changed is, frankly, the internet and growth in people knowing that your IRA can invest in real estate. Because when retirement accounts first came around, the financial services industry like dominated retirement accounts. So like if you're like Merrill Lynch or Charles Schwab or whoever, and retirement accounts came around, they're like, well, we sell stocks, bonds, and mutual funds. We might as well set up retirement accounts for people so they can buy what we already sell. And so that's what's happened is the financial services industry has dominated the conversation. Financial advisors, broker dealers make money when you buy that stuff. So that's all they talk about. That's all you see commercials about. That's all the messaging that's out there. So you've always been able to do this. And I would say real estate is the most common self-directed asset that people will buy. But, I've had clients buy Mexican soccer teams, livestock, of course, startups that have gone to turn into publicly traded companies. I mean, we've had lots of variations of what you can do. So it's really any investment self-directed that is not on the stock market. So some people call those alternative assets, quote unquote. But when you look down at it, when someone says a self-directed IRA, the most common asset they buy is real estate in some form or fashion, whether it's a rental property, they've lent money on real estate, they invested in a private fund doing a commercial, bigger property deal they couldn't do on themselves, a privately traded REIT. I mean, that's the most common asset people hold here and at most other self-directed companies.
So, Matt, my Roth IRA that I have with TD Ameritrade or Schwab or whomever, can I take money with my Schwab account and invest in real estate with that?
No. So what'll happen, because that's what people think, right? And they're like, hey, Matt, I called up TD Ameritrade and I said, and I with my Roth IRA there, and I said, I want to, invest in the duplex down the street. And they told me I couldn't do it. Well, you don't know what you're talking about, Matt. And I'm like, no, okay, your Roth IRA can do it. Your TD Ameritrade or Charles Schwab Roth IRA can't do it. You're at the wrong place. So it's kind of like you're at McDonald's asking for a chalupa. Okay. You can eat chalupas. You're just not getting them from McDonald's. So you've got to move your money from Schwab or TD Ameritrade, that Roth IRA, over to a self-directed IRA custodian, like our company, Directed IRA. There's 30 companies that do what we do, but we're the best. So you'd move that amount. You can move the full account or just a piece of it, whatever you're wanting to use to invest in the real estate deal. And that's just what's called a trustee to trustee transfer. It's easy. It's cash goes from one custodian to another. Now you've got a Roth IRA at Directed IRA. Now, when you call us and you say, hey, I want to invest in this real estate deal, we just ask for the documents and paperwork and the wiring instructions, and then we'll invest your Roth IRA into that deal.
Thanks for clarifying. So Directed IRA and the other companies like Directed IRA, are you what's called a custodian? Am I saying that correctly?
Yes. So we are an actual custodian. There are some companies in our space that are what's called a third-party administrator. So that's one thing when you start going out and looking at providers of self-directed IRA accounts, they're not all created the same. Generally, you want to work with a company that has the word trust company or bank in their name. I know the word bank in your name doesn't give a lot of confidence right now, but let me tell you, it's a lot better than these third-party administrators. So there are some companies in the space that are not audited, are not regulated by a banking department, do not have a banking license, which is pretty hard to get. There's extensive level of audits and examinations that happen every year into your account and to all the company's records. So we're an actual trust company, third-party audits by CPA firms. We actually have 2 different ones that audit us. And then we have an annual examination by the banking department here in Arizona. And so if you see any companies where they're a trust company, they're an actual custodian. It's called an administrator. There's some people call it a third-party administrator. And those companies, I won't name them here, but there's a lot in our space. They use a bank or a trust company behind the door that you don't know, that gets around the rules because you have to have a custodian for the IRA at the end of the day. So that's a little tidbit, but we are an actual custodian of the account, which basically means we have to custody your assets. And we do the reporting to the IRS for your account every year to tell the IRS, here's how much their account went up. Here's how much distributions they took. Here's how much new contributions they took. Here's how much money they rolled over from their other IRA. And we actually file a form called a 5498 to the IRS on every account at the end of the year. So those are the things your custodian's doing.
Okay, really helpful. You touched on a couple things here. I want to see if we can get any more information out of you. When people are looking for a custodian, let's say, yes, I think the self-directed IRA
Yeah.
is a thing I want to pursue. What sorts of things should they be looking for? What questions should they be asking in a potential custodian?
I would just, I mean, the first thing is I would just talk to their staff, talk to their team. I mean, at the end of the day, that's who you're going to work with and opening up the account. And make sure that the people you're working with have competence and that understand what you're trying to do is something that they're interested in supporting. Sometimes we have customers call here and it's like, yeah, we're not into that, like that's not, you can't invest in cannabis deals, for example, here right now, where some companies in our space will let you. But so kind of get an idea of what they do. Some companies don't allow you to do what's called an IRA LLC. Our company lets you do it as long as you do it right. And so make sure first that it fits for you. But I'd also research the reputation. Get online, search around. If you're an investor, ask around in your group of friends or contacts of the companies you're looking at. See if any of them have experience or have heard anything about that. Maybe get a recommendation from someone. But I also like using an actual licensed company. I don't want to come back to that. I mean, not like we're the only one. There's plenty of other licensed companies in our space, but I just think there's a big differentiator there right now. And there is a company that was a third-party administrator that went out of business and a bunch of cash was missing at the end of the day. And people had to take a 10% haircut. That was a third-party administrator in Utah that just was never licensed or audited. So no one knew. Went on for 20 plus years. So, just look into that. That's probably not the best example to give talking about self-directing, but, I just like look at the basic things you're looking at for any company. So I just go through that process, that list.
Great. Let's talk more about the benefits of a self-directed IRA. So let's say I'm interested and I've got this Roth IRA and I'm tired of the stock market. I want to go all in on real estate. Tell me, what kind of benefits can I expect to gain from investing in real estate with my Roth IRA?
So I think for any IRA account, you want to just be chasing a better return, right? At the end of the day, we want a bigger retirement account or the biggest retirement account we can get possible. And if you think you can get that in the stock market, I'm like, go for it. Like if you know the stock market or mutual funds or whatever it is, do that. We've just had, even in my law firm, we've just had a lot of real estate clients over the years. And I even remember one of my very first clients that did $1 million plus deal in his Roth IRA. He invested $10,000 on an option on real estate. He turned it over $1 million profit 3 years later. That all went into his Roth IRA. He didn't even own real estate. He just did an option on real estate. That whole $1 million profit went into his Roth IRA tax-free. So he got the best of both worlds because he had a Roth IRA and he made all the money tax-free, but he also got an incredible return, so like he couldn't invest his IRA in a stock or a mutual fund that was going to get a huge return like that. Now I don't get those, $1 million return on $10,000 investments in my account, but can I do better than the stock market or mutual funds? Because I happen to know real estate a little bit better. I have a little better competitive advantage. I'm willing to go hunt and find deals instead of just buy a stock or mutual fund off the shelf that everyone else is shopping for. And it's kind of the price is what you get. So I think the first benefit is invest in it because you believe in the asset type and you believe in the deals you can make, that you're going to get a better return than whatever you're doing in the stock market. So that's point one. Point two is there are tax benefits. The example I gave you of the guy with the option, and I've had clients do, small deals, big deals, particularly with Roth IRAs, which is in your example. That account comes out totally tax-free at retirement. So if I buy real estate with my Roth IRA, when I sell it, I don't pay tax. And when I pull the money out at retirement age, which is 59 and a half, I pay no tax on the way out. So it's a totally tax-free way to build and grow wealth in a retirement account. Using the Roth account in particular. Now we have a pretty high rate of Roth accounts in our office compared to traditionals. We're about 50-50 between Roth IRA versus traditional IRA. I think in the space in general, it's more like 2/3 traditional IRA, 1/3 Roth IRA. But we just attract clients more that want that tax-free on the way out. So, but even if you're using a traditional account, let's just say, you buy stock, $100,000 worth of Facebook stock in a non-retirement account. Okay, this is in your personal brokerage account. Okay. And you sell that for 150 grand. Okay. You're going to pay tax on 50,000 of gain, right? Well, if I use an IRA, traditional IRA, Roth IRA, doesn't matter, bought a $100,000 piece of real estate, sell it for 150 grand, that whole 150 grand goes back in the traditional IRA, Roth IRA, whatever it is. I don't pay any tax. It doesn't go on my 1040, right? Retirement accounts have that benefit of we're not being taxed as we grow the account. So we get that tax deferral for traditional accounts, tax-free and Roth. We're not paying taxes. We're making money and growing the account. And that's an overriding principle of why people invest in retirement accounts in general, like it just period, whether you're in your 401k at your day job and contributing to it and investing, all that money you're making, you're not throwing that down on your 1040 when you make profits and paying tax and sending the IRS and your state a little bit of money. The whole thing gets to keep investing and growing and growing and growing, which is a big deal when you look at investing for 20 or 30 years. That's a lot of money that you save and a lot of compounding growth you can have over just investing in a personal account that you pay tax as you go.
I already do disclosures in this show, but I'm going to continue with the disclosures. This is not tax advice. It's not financial advice. It's not legal advice, even though we're talking to an attorney. So definitely people need to consult their own professionals if they're pursuing something like this. But I want to clarify some of the IRA distinctions. Traditional IRA is you put money in pre-tax and you pay tax at the end when you make your distributions in retirement times.
Right.
Roth IRA is post-tax. So you put money in, it grows tax-free. When you take your money out, when you get to retirement age, it's tax-free. So I want to just confirm with you the Roth IRA, that example that you gave, it was an extreme example, but it was helpful because some people in real estate really do see these massive gains. You know, they catch lightning in a bottle with a syndication or a fund or something, and they really can turn $100,000 into 500,000 or $1 million or something like that. So to clarify, that is in most situations, we'll get to maybe some exceptions later. You're not paying in a Roth IRA. You're not paying taxes on that gain if you see a huge gain from a real estate transaction.
Right. Yeah. I mean, that client, that example I give quite a bit, but it was, it was illustrative because this was a client who was a pretty sophisticated real estate investor and developer, but he understood the tool, particularly of the Roth IRA. So one, he caught the grasp that, I can actually buy real estate with my IRA. But even better, if I got a really sweetheart deal that coming down the pipe, I should do it in my Roth IRA because it's going to come out totally tax-free. You know, this guy was in a high tax bracket for federal and state. And so he would have been paying a pretty big tax bill. Highest capital gain rate, 20%, paying his state tax. You know, at the end of the day, he would have paid 30%, even though it was a long-term gain. So for him, the Roth IRA was awesome because you got to make over $1 million profit, totally tax-free. And, once he hits 59 and a half, he was in his 50s at the time, 59 and a half, it's going to come out totally tax-free on the way out. There is no better deal in the tax code, right? There is no way you can legally do that except in a Roth IRA or a Roth 401k, which a lot of our clients do those too. So, so now the Roth IRA and that is kind of like, not everyone gets that. I'll just be honest, we have different accounts and strategies and what people are doing. And, we don't pick your investments. You decide whatever you want to invest in. We don't even give you opportunities to say, invest in this, invest in that. I mean, you come with whatever you want to do, or you go find out what you want to invest in. You want the property 123 Green Street, the XYZ real estate fund, the ABC syndication, whatever, you choose what you're investing in. But I mean, we see some of those clients that are like the home run hitters is what I'll call them, that can like hit a grand slam in a Roth IRA with a little bit of money and make a 100x type return. And those clients definitely should use a Roth IRA. But then we see a lot of people that are just base hitters too. A lot of people just doing private money lending with their account. Just give me 10% interest in 2 points. You know what? If I do that year over year, I'm going to double my account every 5 to 6 years at least. So, in over 20 years, I'm going to quadruple the size of my account at least. And so, So sometimes, and that's even me, I'm like a base hit person. Like I bought rentals in my retirement account, like single family homes, and I've done private money loans. It's not sexy. I'm not getting 10x returns, but I've been able to 3x. I've been able to have some pretty good deals just from doing basic stuff. So everybody's kind of comes at a different place in terms of like their opportunities. Maybe you are the super sophisticated investor that sees those deals with huge returns. Maybe you're someone that's just kind of like me. You got a day job or you're trying to run a business and you just need base hits to kind of build your retirement account in the background while you're out working and doing your job.
There are tons of benefits to the self-directed IRA. Let's talk about some of the restrictions. So you can't do anything in real estate with a self-directed IRA. So tell me about some of the things that we cannot do in regards to real estate with a self-directed IRA.
So you can't buy property for personal use. So if I'm buying real estate for my IRA or 401k, that's going to be held for investment purposes, right? I'm not going to use it personally, or my kid's not going to stay at it. So there's a group of people that the IRS say are prohibited from transacting or being involved with your IRA. And that list includes yourself, your spouse, and for people in Utah, that's all your spouses, your kids, your parents. So we're including all those people. And this is basically people the IRS doesn't trust you to transact with. So they can't use the property that your IRA owns. You can't buy or sell real estate from your IRA with them. If there can't be a real estate commission or management fees or something paid to these people from properties your IRA owns. So you basically got to keep yourself and these disqualified family members separate from your retirement accounts investments. Don't go buy assets from them or let them use or have use of them or make any money off of them personally. That's the biggest rule. It's called the prohibited transaction rule. And I have a book, the Self-Directed IRA Handbook. It's the number one book in the space. I think as you mentioned in the intro, but it's I've got 5 chapters on prohibited transactions and 50 plus cases and citations on dumb stuff people did that screwed it up. So, but if you just steer clear of you being involved, and sometimes there's creative strategies, I'll be honest, where you can do some things, but you want to get some guidance from an attorney on that. But if you just steer clear of being personally involved or your spouse or kids, you're going to avoid 99% of the problems.
I am a DIYer to a fault. I self-manage my properties. I'm the one in there that's mowing the lawn and tiling showers and putting new vinyl plank flooring down.
Yeah.
Am I a candidate to use the self-directed IRA for my own properties?
Oh, that's a great question. You're a candidate, but you're going to need to change a little bit, for these deals. Now you can manage the property. I'm okay with that. You can be the property manager. You can write the leases. You can show it to a tenant. You can collect the rent. But what you can't do is physical work. So this is one of the other versions of the prohibited transaction rule is called self-dealing, is you can't provide benefit to the retirement account by providing services. So for example, laying the flooring, fixing up the property, doing any improvements, even just repairs is going to fall in this gray area of, is that benefiting the retirement account from my personal work? Now, your IRA could pay someone else to do it, pay a handyman or a contractor or someone to come in and do those services. And that's totally fine. And you can go supervise it and make sure it was done right and authorize them to be paid. But you physically can't put on the tool belt and do the work. That's where you're going to cross the line and run into this issue.
You brought up an interesting point that I want to get more clarification on. So let's say I say, okay, fine. I'll hire a contractor to do the tiling, but I'll oversee the contractor. You talked about payment. When I pay the contractor, when I buy materials, do those funds have to come from the self-directed IRA, or can that come from my business checking account?
It's got to come from the IRA. So if the IRA owns it, the IRA's got to pay for the expenses of it, and it's going to get all the income too, right? I mean, if it's a rental, it's going to get the rent check. When the property sells and there's a gain, it's going to get the gain. So the retirement account owns the thing, and it's got to bear the expenses of it. And usually, sometimes clients have a property manager The IRA could own it directly, and they have a property manager that's just paying the bills and sending back the cash flow to the IRA. Sometimes, though, you will have clients use what's called an IRA LLC. And that's a structure rather than your IRA owning the real estate. Your IRA is going to own an LLC 100%, which you can be the manager of the LLC. You don't own the LLC, but your IRA is the manager of it. That LLC in turn can own the property. And what happens with the LLC is the IRA invests its cash into the LLC. LLC has a business checking account, which you have authorization on as a signer. And then you're cutting the checks from the LLC business account to purchase the property, to, to pay a contractor if it's a rehab or there's work being done on the property, receive the income. It's all going to the LLC. But remember, you don't own the LLC, so you never take money from the LLC. The IRA owns the LLC. So you don't want to take money. It's got to go from the LLC back to your IRA, and you take a distribution from your IRA. But that's a really popular strategy in real estate for people that are doing their own deals, kind of particularly the DIYers that don't have a property manager. An LLC is very helpful to them because it puts them in control. It gives them the checkbook, and they can just pay the bills, cut the deals right out of the LLC. We have clients that, buy property at auction. They need an LLC because they need a cashier's check like within 24 hours or something. Getting that turned around with an IRA custodian can sometimes be pretty tricky. So the IRA LLC is a great strategy sometimes for the DIYer, but you can't go over and work on the property. That's where the line is drawn. You need like administrative paperwork, cutting checks, paying bills, contracts, showing, overseeing. That's all fine. It's the physical work and improvement that crosses the line.
Really helpful distinction there. I want to shift from the DIYer to the investor, where this sort of makes a little more sense to me, the totally passive investor. Let's say there's an investor who is investing in a syndication or a fund where there is absolutely no chance that they're going to go over and start tiling showers at this. Say they're investing in a retail strip center with another operator. They don't have anything to do with the management or operation of that center. Mm-hmm. Let's say this fund or syndication is able to get huge tax benefits. Let's say they do, year one, they're doing cost segregations, or, they're doing depreciation over time. Is someone who invests in a self-directed IRA, are they able to realize any of those tax benefits that someone investing with straight cash would be able to realize?
No. So when you say tax benefits, if you think of the IRA as it's tax neutral, and I think most of us would want tax neutral. So I don't pay taxes in an IRA, right? When I make gains, I don't pay tax. So what am I going to take a depreciation against? Like, right, with the IRA, the deal the IRS gave is they said, hey, this doesn't go on your 1040. Don't worry about it. You don't pay tax when you make money on this. But then a lot of people get caught up in this and they're saying, don't use your IRA to invest in real estate because you don't get to take the depreciation benefit. Well, wait a second, it doesn't pay tax at all. What does depreciation help? There's no tax due. What am I going to even use it for? Oh, well, I know, but when you buy real estate, you get all these tax losses. I'd rather have no tax. So yes, it's true you don't get depreciation on the retirement account, but that's just because there's nothing to pay tax. There's no tax. You know what I mean? So I'd rather take that deal. But I think, one of the knocks that I hear a lot of people say on, real estate, even if it's you're passively investing in someone else's deal, or even you're doing your own deal, is don't worry about the tax losses. You're not paying tax on the way out. You're not paying tax as you make money. So focus on, is this a good opportunity? Is there growth? Is this growth going to be better than whatever my retirement account was doing yesterday? Or whatever it's invested in today, is this going to be a better deal and deliver an overall bigger return for me? And you got to make your own estimation there, right? Everybody's got to make that decision for themselves. So, I'm always like, there's no tax. Don't stress. The IRAs don't have to worry about that. So no reason to use the depreciation.
As you started explaining your answer, I realized the error in my thinking. I'm always
Mhm.
I'm the kind of person that's always looking for like the best way of doing something. It's another fault of mine. Um, but so here's another scenario for someone like myself
Yeah.
who is a real estate professional. Um, so the benefit to those tax write-offs would be someone as a real
Yeah.
estate professional, it could be used to offset my ordinary income. So to carry on with your previous point, there's no way to there's no additional benefit for a real estate professional using a self-directed IRA.
Yeah. Not really, except that you have this account now that pays no tax period. So take, for example, that client I gave you, that the Roth IRA guy, $10,000 option, made $1 million profit. I mean, that client's a real estate professional, but he's looking to generate returns, not losses. He wants returns that he pays no tax on. That was what he was focused on. Now, you can be invested into real estate assets as a real estate professional and cash flow them and actually be making money, but have a tax loss, right? Which is like awesome, right? And I love that you can do that personally. But you know what you also get personally? You pay tax when you make money. And that depreciation that you're taking and those losses and that cost segregation study you have, when you sell that property, you have depreciation recapture, you know? And so eventually that comes back and hits you. But in that Roth IRA example I gave you, tax free. There's no heartburn later. And so it's a different set of incentives, and real estate's got some awesome tax benefits already outside of retirement accounts, like the real estate professional one you mentioned. I mean, I can't be a real estate professional. I wish I could. I should have married one, you know, if we're just talking tax here, but but like you can use losses against your other income, true as a real estate professional, but your IRA is just not hitting your 1040. I think that's the best way to think about it. Is your retirement account doesn't even hit your 1040 for tax or for losses. Just think of it totally separate from you.
That's a really good perspective. I think it's really common in the real estate world to get so caught up in taxes and delay, avoid. And I think a lot of real estate
Yeah.
investors end up making bad investing decisions just to avoid or ultimately just delay paying taxes. And so I really appreciate your perspective. And for a lot of investors, it's just going to be different buckets. You've got your passive bucket where maybe you're using your self-directed IRA.
Great point.
Maybe you're doing some active stuff that is taxed, but it's good to have different buckets. It's good to have income coming from different sources. And when I approach 60 years old, I think I'll be
Yeah.
really grateful to have that Roth IRA with a boatload of money in it that I haven't even been thinking about for the last 20 years. But then I hit that magic age, and all of a sudden it's available to me.
Exactly. Yeah, and I think the buckets example you gave there's a great way to think about it, because I still buy real estate outside my retirement account. I buy it in my retirement account. I'm not saying one way or the other is better. I'm just saying if you believe in real estate, use the resources you have to build wealth in the most efficient ways. And I might want this long-term bucket of money in an IRA or 401k invested in growing for the long haul that I can rely on the way and retirement when I hit 59 and a half plus. But I also like building wealth outside my retirement. I can access it now. I can sell a property now for something I want to do. I could strip equity out. If I am a real estate professional, I can get those tax benefits to offset other income. I totally get it. But don't think of it as either or. It's not, you can have both. If you like real estate, but that's the thing, if, and that's why I say self-directing is not for everybody. Like some people come to me and are like, Matt, should I self-direct my IRA? I'm like, well, what do you want to invest into? Well, I don't know. Tell me what to invest into. I'm like, self-directing is not for you. Like if you don't have an appetite or desire to invest in real estate or the alternative investment classes, or if you don't have a belief that those are the ones that are going to make more money, then it's not for you. But the fact of the matter is there's so many people out there that didn't even know they had a choice. Like I give continuing education classes to realtors, to attorneys, all the time. And I'll go speak to the Real Estate Lawyers Association, or I'll go speak to the the board of realtors and, for the real estate professionals. And I'll ask those groups, how many of you have an IRA or 401k? 90% of the room raises their hand. How many of you own a mutual fund in your IRA or 401k? Everybody's hand still. Or I own stock or a mutual fund in your account. Everybody's hands up. How many of you can tell me a good mutual fund investment with your retirement account? Everybody's hand goes down. No one wants to claim it. No one wants to be like this one. And then I ask, how many of you can tell me a good real estate investment? Everybody's hand goes up, right? And it's like, well, why are you investing in mutual funds that, frankly, you don't even know the name of the mutual fund your retirement account's invested in? You have no idea their performance. You don't even understand the fees you're getting charged, but you just click some buttons because it was easy. And now you got $500,000 in this account over 20 years. Like, wake up. You know real estate. Use this amazing tool over here and this source of funds to invest in the things you're actually interested in. And you actually might have a competitive advantage of learning or doing deals in. And so that's kind of like my message as I'm out there is, we know there's an appetite of people that want to invest in real estate, that have done better at it, whether it's someone buying their first single family rental to the super sophisticated real estate investor. They just feel safer there. And we just want them to know you can use your retirement account, whether it's owning the property, investing in a bigger deal or fund with others, private lending on the property, whatever it is. Just know this is an asset class available to you with that retirement account. You got your little sliver of the $35 trillion out there. You could grow that investing in real estate or other alternative assets.
That's a great example. And I think just kind of a symbol of us as humans. Like, we know the right thing to do, but yet most of the time we just don't do the right thing. So I want to talk to the investors out there who are maybe trying to raise money from friends and family. Typically people with large Roth IRA or traditional IRA accounts, or they're often retired. They've done some rollover from their 401k. Now they have this Roth IRA, and maybe it's Uncle Charlie and Aunt Betty. They've got $1 million sitting in this Roth IRA, and you explain this to them, and they're like, "Yeah, I you're promising me 10% returns on this real estate investment that you've got. Okay, I'm in. Can you give us a step-by-step, first do this, then do this, then do this?" If someone says, "Yep, I want to work with Matt at Directed IRA," give us a step-by-step of what people need to do to get into a self-directed IRA.
Yeah, it's really just, and I love that example, because for people out there raising money for deals, this is one of the best tools out there. Knowing that the people you're talking to, it's more likely, frankly, that they're going to have money in an IRA or 401k to invest in your deal than they're going to have in a personal checking or personal brokerage account that they're going to liquidate to invest in your real estate deal. And for real estate, a lot of people like investments that are really liquid. That's why people like the stock market and have a little brokerage account. But with their retirement account, it's long-term. So you're thinking for the long haul when people are investing with their IRA, they're not thinking about touching it next year or even 5 years. They're like long-term. Go do this in a real estate deal that might take 5 to 10 years before you exit. So I just love it as a strategy for anyone raising capital. And we've done webinars on how to do it and how to, kind of like unlock the money. I have so many examples I could give on that. But let me answer your question about the process. I just talked to Amy Majori. She's somebody that sends us some clients. I've been on her podcast and stuff. And you know what she told me? She's like, I don't need to know this stuff. I just need to know, call Matt, call Directed IRA. Because I just need to know that you can do it. And I can get the conversation going so this person knows they've got an IRA or old employer 401k to invest, and then connect them with my team. I mean, we're motivated to open the account, get it funded, and have it invested. And that's it. It's 3 steps. Open the account, which you can do an online app at our office, get it funded. We're usually transferring funds over from your other IRA at TD Ameritrade or your old employer 401k at Vanguard. And then we're getting it invested in the deal you want. And so that's it. It's just 3 steps. So, but we have resources and people available to help you. you might only do this once, like open an account, fund it, and invest it. And then, maybe that investment comes back and you go to another one and you keep doing this. But so it's pretty easy to do. Rely on the company you're working with. At Directed, you can just book an appointment. If you go to directedira.com, schedule an appointment. We have a lot of people who just throw that link around to their investors that are interested to say, hey, go work with these guys. They know what to do. You can get a free call. They'll go over the account setup process, the rollover. You don't need to get stuck in the weeds. We have people that do this every day. Just focus on raising money in your business, finding the deals, and then you can send them to us, and we're the resource because we want to open their account. Our sales team is motivated to open an account. That's how we make money. And we're going to walk them through that process.
Great. So you just mentioned making money. How does your firm, how do self-directed IRA custodians make money? Is there an assets under management fee? Is there a transaction fee? What kind of fees should investors expect to pay?
So some companies in our space have an asset under management fee where it's a % of the size of your account that they charge. That's probably a third of our industry. Most of the industry has moved to a flat fee. And there's two varieties of that in the industry. There's one that's a flat fee per asset. So if you have 10 assets, you have 10 different fees. Another segment of the flat fee model is what we are, which is just an annual flat fee no matter the size of assets. But we have a processing fee when you buy and sell. So for example, our account fee is $295, and we have a processing fee of $50 every time you buy or sell an asset. Now, if you want to expedite something, there's expedite fees. We usually process stuff in 2 to 3 days. But if you're like, I need to close this today or tomorrow, okay, we could do that. But as long as your documents are ready, but you'll pay extra for it to jump ahead of the line. So, so you get annual fee, $295, and then a processing fee of $50 when you're buying and selling. But once you bought the asset, and it's just sitting in your account, you just have the $295 annual fee. And that's our fee model. I'd say that the average annual fee in the industry is around $500. If you go price shop out the competitors, you'll find around $500, whether it's the multi-asset charging or the asset under management fee model. The average is going to be around $500. Some companies are up in the $1,000, but there's very few that are charging that price point.
When you talk about your $295 annual fee, is that per asset, or is that a flat fee for the investor?
We do a flat fee per account. So if you had a Roth IRA and a traditional IRA with us, it would be $295 each. So you'd have 2 fees. But if let's say it's a Roth IRA with 3 assets, it's still just $295. But when you buy a new asset, we charge you $50. When you sell an asset, we charge you $50. There's a processing fee to buy or sell with us.
Pretty straightforward fees. I really appreciate that about companies. One thing that deters me from using a company is when I cannot understand how much I'm paying the company. And so the flat fee structure just makes a lot of sense. It's really straightforward. So I definitely appreciate that.
Right. Yeah. And that was my pet peeve before I started this company, because I was an attorney advising clients, and I'd send them to one of the companies in our industry that used to do a good job. And I couldn't even explain their fee schedule. And they would ask me, so how much do I pay? And I'm like, you know what? I know I've sent hundreds of people over there. I don't even know. I can't even make sense of it. Can you ask them? That's bad.
Yeah, and I'm the kind of person that's in the weeds. I want to know every last detail of something before I commit to it. So I definitely appreciate that. As we get towards the end here, I want to ask you about your business at Directed IRA, just as a fellow business person, and as a lot of listeners are trying to grow businesses, whether it's real estate businesses or online businesses with selling courses, and trying to get a following on social media and all kinds of things like that, growing a business in the 21st century. I read in your bio that you've grown a ton over the last several years. Can you talk to me about just some general business advice, principles that you have followed that have helped you grow Directed IRA so much in the last few years?
Yeah. I mean, it's a lot of little things, but what I'm realizing more and more as I look back and as I continue to move forward is it's about people. It's about the people you surround yourself with and the people that you work with. For any business that needs to scale, and we've had to scale quickly, I mean, we've been around for 4 years barely, and we started with 3 people. I've got 40 plus at Directed IRA now. Just interviewed someone at lunch that we're going to hire. We're always hiring and growing, 100% count growth year over year. I mean, like, but we've done it in a really good way where we've been, delighting our customer, taking care of things, getting stuff done the right way. But at the end of the day, in our business is a people business, I'm not selling something like a course or something where it doesn't no individual serving that up. It's just many people can buy it online. It doesn't matter. So it really comes down to people because they have to then execute. But you got to have the right strategy. You've got to be in an industry or something that you have expertise in that you can see is going to grow in the future. And then the biggest thing, though, is execution. Because I feel like when we started our company, I felt like I had the right vision for what I wanted it to be. And me on the outside as an attorney, sending all of my clients to other self-directed companies, I was annoyed. I became the expert in the field. I knew everything. I knew all the people. I wrote the #1 book. I spoke at all the association events. And I was annoyed at the companies I had to send my clients to because they just did a bad job. And so I saw the opportunities where they were in the industry to just do it better and make it easy for the client. Because that's our motto, is make self-directing easy. If it's complex, complexity is the enemy of execution is one of the quotes I try to instill over here. We need to make it easy on people. But that sounds simple, right? Oh, okay, we'll just start a company and just do that. No, you got to execute on it. There's no shortage of great ideas out there. There's a shortage of people willing to execute on it. And for me, especially, and for anyone I think trying to scale or grow an organization, the first thing you got to realize, you won't do it alone. And if you think you're the smartest person in the room, you're going to be in a pretty small room. So if you want to be in a big room, you're going to need to surround yourself with people that complement your weaknesses. You're going to want to be in a room with people that are smarter than you and be okay with that. And I'm serious about that. A lot of people are like, well, I mean, I'll get people that are smart, but I'm actually the smartest. No, I ain't going for that. And that's not the case. But that's, I think, been some of our success in scaling. And I'm still in the process of it. We're still growing quickly and trying to do that. I'm still learning. But I don't know. It comes down to execution at the end of the day. Once you got the strategy and vision right, but you're not going to be able to execute on your own. You're not going to be able to scale. You've got to get great people to do it along the way.
Well, thanks for doing my job for me. You just created a clip that'll go out on all the social media platforms. So, I mean, that was that's great. I mean, you made it simple. Having a vision and executing on that vision is the key. I see people posting all kinds of goals and visions on LinkedIn and social media and stuff, but years later they're still in the same spot. So I love your quotes there. You had a couple quotes of complexity is the enemy of execution, and I totally see that in my own business. I love that. So
I think that was a Tony Robbins quote. I'll give credit. I think that was Tony Robbins, but it's true, man. That is truth over here. And sometimes people get confused in our space, right? They don't know what to do. It's new to them. And so if you can make it easy, I don't care if you're selling whatever you're selling, just like you got a lemonade stand. Do you take Venmo? You're going to sell more if you do, just make it easy on your customer, no matter what it is in the process.
The personal rant on that, you talked about Venmo, and my thing is taking credit cards. I work with, contractors and small businesses and stuff that don't take credit cards, and they rant about, I don't want to pay the credit card companies. I don't want to do that. I don't want to, I don't want to pay the fees. And I'm just thinking, man, all the business that you're losing and all the clients you're chasing around for a check and the bounced checks that could be avoided by just accepting credit cards, and you could make it so easy on people. Just take credit cards.
And what's crazy about those businesses, because I've had those clients as an attorney too. So many of those businesses could charge 10 to 20% more for their product or service and just take a freaking credit card, and they make so much more money, and they just cannot get their head around it.
Totally.
So yeah, think of your customer and make it easy for them. That's, I think, really, really important. It's one of those, again, simple things that can be hard to do. Even at lunch, as we were interviewing an employee, we were kind of talking about these things and how we like to do things for the customer. Like, make it easy on them. Don't give them a freaking job. Don't, like, do it for them. Like a form for us. If someone fills it out wrong and we reject it, what happens in my industry typically is they just reject it and send it back to you and say, this was rejected. They don't tell you what's wrong. They don't correct it for you. They're just like, go figure it out. Like, you have to put together a freaking puzzle. They don't know. They screwed up the first time. Obviously they don't know. It's like, make it easy on people, help them, be there for them, support them. So, I don't know, I could go on with these little tips, but, I think some of those little things, though, just to get back to your prior question, some of those little things that will permeate your culture too, about how you approach the customer, is really important. Some organizations and companies, and we've all been a customer of them, you can tell they like hate their customer. Like, they make it so hard for you to do anything. They are like not happy when you call. They seem like you bugged them, and if you have sometimes you can see that culture where those people work. They'll talk bad about their customers. They're annoyed that they have to do something for a customer. And if you got those people, like, your organization's going nowhere. And so you got to also build a culture of people that are excited to talk to your customer, that want to help them. I try to tell my clients here or my team here, when they've got they've got like a customer with some weird request or something, and they're like, man, this person's totally lost. I'm like, what would you do if this was your mom's account? If this is your mom's account, you're going to go over and you're going to over explain this. You're going to hand this over to the next department to make sure it gets done right. You're going to follow up with them. Right. And so, but people feel that in a company, and it kind of changes their feeling of, man, I should really take care of this person. And you know what? Your job is more enjoyable. You're going to enjoy what you do more if you approach your customer in that way. This is a person on the other end. They're a customer to you. There's a person on the other end that's going to reciprocate back that appreciation that you're showing them as a customer, and what you're willing to do for them, and how they're going to treat you. And so, that's something else that I think is really important. And because we're a people business. If you're a people business where people are going to interact with your team every day, like, kind of that culture and how you approach and value customers, really important too.
Well, Matt, I think you answered my question. I know why Directed IRA has seen so much growth over the last several years. I think that attention to detail and the attention to people and helping people solve problems, it's rare in business. And I think you just dished over the last 10 minutes some great business advice. So I sincerely appreciate that, Matt. Mat Sorensen, the company is Directed IRA. If people want to connect with you or Directed IRA, where do you want to send people?
You can find me at Mat Sorensen. That's Matt with one T, MatSorensen. I'm at most social places at that. Or you can just Google me, Mat Sorensen. It's also matsorensen.com. You can connect with me there. I've got a YouTube channel. We have 2 podcasts. I got the Directed IRA podcast that's all about self-directing. I also have the Main Street Business podcast. Both of those I do with my partner, Mark J. Kohler. Some of you may know him. He's, I like to tell him he's kind of a big deal. I like to tell him that when he's in the room in particular. But so we're out there always just trying to educate people, get information out there. Then my law firm is just KQS Lawyers. I didn't mention that either, but I do have a law firm with a team of over 50 there. That's KQS Lawyers. And we do business and tax stuff all across the country. So I'm out there, pretty easy to find. So happy to connect with anyone out there, and let us know where we can be a resource to you.
All of the links are in the show notes to connect with Matt. Matt, you've been extremely generous with your time, your knowledge, and your expertise. Thank you so much for being here today.
Yeah, my pleasure. Thanks, Jonathan.